Hi there, you're watching the special edition of Earnings with ET now. We're throwing the spotlight on Wipro's Q3 earnings, and the first take on the earnings, it's a weak set of numbers coming in. Let's break down those numbers for you and take you through what these numbers are looking like. Revenue has come in at 23,556 crores, absolutely in line with our estimate, and this is an uptick of about 3.8% on a sequential basis. Other than that, everything else is slightly lower than what we were estimating. The EBIT has come in at 3,491 crore rupees. Our estimate was slightly higher than that. We were expecting the EBIT to come in at around 3,900 crores. So that is a cut coming in on the EBIT, and it's a downtick of about 5.1% on a sequential basis as well. The PAT has come in at 3,119 crores, also lower by 4% on a sequential basis, and this is largely to do with the one-time labor cost impact that the company has taken. Absolutely in the similar fashion that you have TCS, HCL Tech, they have also seen Infosys, they have also seen this labor cost, and this employee expense this time around has come in at 14,200 crores compared to 13,606 crores, which means this is an uptick of about 303 crores in terms of their labor cost, or that one-time labor impact that they had to take. Talking about the EBIT margin, that's come in at 14.8% compared to 16.2%, which is a massive cut of 140 bips on a sequential basis. We were expecting the margin number to be absolutely flat around that 16.2 mark, 16.7 mark as well. So that is also very lower than what the street was estimating. They've announced the interim dividend of 6 rupees per share. Let's talk about the IT revenue. That's come in at 23,378 crore rupees, up about 3.5% on a sequential basis. The IT services constant currency growth has come in at just 1.4% sequentially, and total bookings have come in at $3.3 billion, which is down 5.7% on a year-on-year basis in terms of constant currency. The IT services operating margin has come in at 17.6%, which is a very narrow expansion on a sequential basis. The EPS at 2.98 rupees per share. Talking about our takeaways from the press release, the voluntary attrition has come in at 14.2%, and more importantly, the guidance that they have spoken about, they expect revenue from IT service business segment to be in the range of about 2,635 million. So that's $2.6 billion to $2.68 billion. This translates to sequential guidance of 0 to 2% in constant currency terms. Let's take you through what these numbers mean in terms of a breakdown. We have Mr. Sushovan Nayak, research analyst at Anand Rathi Institutional Equities, joining us on the show to get a better sense. Mr. Nayak, first off the bat, give us your take on these numbers. Other than the revenue, the other numbers seem weak. Yes, Pat has seen that one-off employee cost expense, but other than that, give us your sense on what these numbers look like to you.
I think, in my view, the numbers are in line, because if you look at the revenue growth on a constant currency QOQ, which is almost 1.4%, which is what we had expected, including the impact of the acquisition. The margins also, I believe, if I exclude the impact of the labor, the wage code impact for us, we believe that this is in line. So overall, it is a decent set of numbers.
Numbers to you, but Mr. Nayak, talk to us about the guidance between 0 and 2%. They've given that revenue guidance. What are you making of that?
0 to 2% for Q4 you're referring to, right?
That's something that they have not specified, but that is the wording that they have used, yes.
Yeah, I mean, if that is excluding the impact of the acquisition that is there, then I believe this is something that could have been better, but that is something that could have improved as such, the 0 to 2%.
Yes, so yes, this is for the quarter ending March 31. So yes, this is the Q4 outlook coming in. Expect revenue from IT services business segment to be between 0 to 2% in constant currency terms. Mr. Nayak, talk to us about... Yes, please go ahead.
In fact, what I would say is, if you look at Wipro, historically it has had a negative growth, but with this quarter we are seeing the positive CC growth, and the guidance also looks to be a positive growth as such. So for us, the fact that Wipro is coming back to the growth path is something that is a positive. Obviously, this may come slightly at the cost of margins, but in the broader scheme of things, to us it appears to be inline numbers. Yeah.
Okay, so this guidance of 0 to 2% has been maintained, isn't it, from the previous quarter?
The previous quarter, I think it had the impact of the acquisition, which was 1 month of acquisitions. But now I understand that this number is again positive. So I believe it's a inline number as such.
Line number. Mr. Nayak, talk to us about the deal win. The total bookings have come in at $3.3 billion, which is down 5.7% year-on-year in constant currency. What is your take on this front?
Sorry, if you could come again, I just lost you.
Yes, it's $3.3 billion, or in million terms, it's $3,335 million, which is a cut of 5.7% year-on-year in constant currency.
Yeah, but if I look at it from an overall perspective, the LTM TCV number, this could have been slightly better. But given this is Q3, we should also wait for Q4, where possibly we'll see the bookings to increase, right? So.
On that note, Mr. Nayak, we'll let you go. Thanks so much for joining us. So, Mr. Nayak believes that it's an inline set of numbers coming in for Wipro. Of course, that one-time impact on the overall profitability on the back of that labor cost is something that we've taken. But yes, that is the case coming in, and that's the numbers that we're seeing on Wipro. With that, we'll wrap up this special edition on Wipro's earnings. Thanks so much for tuning in.